The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Good morning, folks. Welcome to the September 18th Trader's Edge Show. I am Steve Rhodes, filling in for Larry Pesavento. Great to be with you. Always love doing the 9 to 9:30 a.m. show. So if you are listening in between 1 and 2, this is obviously a recording, but I'll try to make today's show as pertinent as I possibly can so that you can take a look at specific levels and what the markets are doing at that point in time out here. Love to do this show because just like yesterday, we had futures moving lower, but you and I, we pulled apart the markets. We took a look at those short-term time frames. We showed those Rhodes momentum indicator bottom signals inside the NQ, and that certainly was of help. So we're going to do the same kind of thing today. Of course, I would love to hear from you. Now, you can give us a call at 877-927-6648. I am having trouble with my Skype, so I won't be able to actually speak to you by voice, but you will be able to give the production department the specific instrument and anything that you're looking for, and that way I'll be able to review that for you. My apology out there. You can also send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. Again, I'm Steve Rhodes. Welcome to the show. Right now, we got all the U.S. equity futures pointing higher. Dow futures up 17 points, so no big deal. NASDAQ futures is a big deal. Well, a bigger deal. It's up nearly 0.7% or 75 points out there. S&P is up 11, and the Russell is up a couple of points out there. Now, the spot volatility index, that's really the key level out here. So let's begin by going over and taking a look at that, and we'll jump back and forth into the markets. But what I want to do is I want to give you what is really the most important thing for you to be paying attention to right now. What you're paying attention to is that 50-day exponential moving average for the spot volatility index. That is right now trading at 2651. It's not trading, it's printing 2651. The spot volatility index is trading out at 2576. It is below the 50-day exponential moving average. So we know that. Now, why is that important? That's really important because, and you can do this, so it's a very simple tool out here. This is generally speaking, it's not going to help you catch the top tick, sell the top tick, buy the bottom tick, but what it will do is it will give you an overall wind at your sails, wind at your back, wind headwinds out there. Look, it's really this simple. You go take a look at the spot volatility index, which is my bottom part of my screen out here, and you go take a look at time periods where it's trading above the 50-day exponential moving average. So that would be sections highlighted in yellow versus when price is trading below the 50-day exponential moving average. And it doesn't matter what the value is. How did Stevie come up with this tool out here? Well, it was really doing the historical analysis. And you can go back and take a look at the 2009 bottom. You see, sometimes you'll hear people talk about a spot volatility in the 50s and the 60s, and like that has some kind of specific meaning, or whether it's in the 10s or 20s out there. BS! Before Steve shared with you this chart out here, you only need to know one thing. Where is the spot volatility index trading in relationship to that 50-day exponential moving average? And then generally speaking, you will be able to see whether price is moving sideways to higher, sideways to lower out there. Well, it's back below the 50-day exponential moving average, and therefore, if you are short the S&P 500, make sure you have a tight stop. Why would you want to have a tight stop? Well, now when you take a look at market conditions, as we're speaking at 9:10 in the morning, spot volatility index below the 50-day. And if you take a look at the right-hand panel, bottom right-hand panel, what took place yesterday was the ES Mini got down, tested, and rejected its bullish structured daily profile. That level was 33.15. Did it get down below that area? Yeah, that ticked down to 33.10. Does that matter to us? No. It's always the end-of-day close out here that is what is important. Here's what you know. Price was unable to bust them to the downside. Couldn't do it yesterday. Had every opportunity. At day's end, the spot volatility index closed below the 50-day exponential moving average. If it remains below the 50-day the rest of the day, the markets are not going to crash lower. They're not even going to go test 33.15. Instead, more likely, they're targeting 34.31. Now, before they can get to 34.31, there is a resistance level. Again, we're just taking a look at the ES mini that it will deal with, and that is probably where price is headed to. Right now, that print is 34.20. This is what's referred to as Stevie's green line. Now, you're looking at a daily time frame chart here for the ES mini, and all I'm using, so I'm not using any, I'm not interpreting the chart any differently than you would if you use these exact same tools out here. And you really should. Not because I love these tools, but because they absolutely assist you in understanding what the markets are doing out here. So the green line, referred to as the oscillator and change line, you always hear me refer to it as Stevie's green or red line out there. That'll act as a key level of support or resistance. It is not a moving average. You do want to learn how to use this, and for all time frames. Then what you also want to be able to do is understand where is the market breaking out. I guarantee you, if I pull this ES mini chart out here, if I pull this back, and I asked you where did price break out, you will not come up with 35.10.25 as the most recent breakout inside the ES mini. You won't even come up with 31.84, which would be the level that price would move to if in fact we saw price close below 35.10. out there. So what do we know about the ES mini? Not only did it pull back and test the bottom of bullish structure daily profile, it's also pulled back and tested its breakout level, 33.10. Remember yesterday's low, 33.10? You think it's just a coincidence? A coincidence that price pulled right back to its breakout level? Okay, so we've established, and this is not subjective. That's the beauty of it. That's the beauty of this pattern. Is you now have a absolute breakout level. Like, that doesn't guarantee that price isn't going to break through that area. And when it does, well, then that gives you a new message. But in a bull market, you always want to buy an instrument that is pulling back to a breakout level. Well, the ES mini did it yesterday. Now, from a trade standpoint, let's say you're trading this here. Where is it that you're going to look to jettison that position? Well, you probably wouldn't. This would be a short-term trade. You probably wouldn't carry it over the weekend. Not that you couldn't, but you probably wouldn't out here. But your price target's going to be Stevie's green line, 34.20. Now, the ES mini has struggled to get up there, so I don't know that it'll get all the way up to 34.20. Still, nonetheless, that would become your target. Now, that line level is going to increase or decrease as price moves higher or low, but that becomes where price is likely targeting. Now, we have other instruments that have tested and rejected Stevie's green line. One of those instruments is the NQ. So as we switch over to it, what do we know about it? Well, guess what? It's also pulled back to its breakout level. That's at the 11,074 area. Now, we have seen slight closes below that. Stevie uses a real simple tool out here. Just closing above or below support one day out here, especially when it's a smidgen out here, you need to have two consecutive closes. It could just be a false breakdown or false breakout up here. Well, in this case here, the level is held. So where is it that you believe the NQ would be targeting to the upside? Exactly. Stevie's green line, 11,517 at the moment. Steve Rhodes with TFNN. Be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Steve Rhodes filling in for Larry Pesavento. That's if you're listening to the 9 to 10 hour, and I'm filling in for myself if you're listening to the 1 p.m. hour. We'll be back to normal operations on Monday. So we've got a couple of questions that have come in. One here from John in Philly. And again, you can give us a call. You'll just have to give your question to the production team, and they'll go ahead and get it back to me, and that's how we'll do it for today. And the question is, there's a daily time frame chart for the QQQ ETF. And the question is, and I've drawn in here, the question is, does yesterday's low generate a 3 drive to a bottom pattern? And on the daily time frame chart, not really. Well, first, let me answer the question this way, John. For me, a completed pattern will occur with a bullish reversal candle. A bullish reversal candle for a bottom. And a top would be a bearish reversal signal. Doesn't matter to me whether it's an A to B equals CD pattern, which is really part of the 3 drive pattern. So if we take a look, I'm going to get rid of that, and you'll see the green shaded area here. I'm going to go ahead and get rid of it. This doesn't really even qualify as an A to B equals CD, and the reason is because the retracement, here's the A point, which would be, well, I don't have my cursor on, give me a second, but I'll get back to it. That would be your A to B equals CD, but your retracement was 88%, almost a move of a move out here. So I would say this is more of a test and rejection of the swing point from back on September the, what was this here, the 9th? No, the 11th out here. But as you mentioned, that this pattern is much easier to see on a short-term time frame. And you mentioned the hourly chart out here. So I'm going to go with the hourly chart. That doesn't mean that there wasn't a bottom. It's just I don't take a look at that pattern and say that was a 3 drive to a bottom. Instead, though, if we take a look at the NQ, what we do have is a valid bottoming signal out here. That's the Rhodes Momentum Indicator signal. That's when price is pushing lower, doing less relative energy there. So in other words, here's the pattern, John. So this is really the reason why I share with you that you really do want to understand your P's and Q's. You want to understand your bullish and bearish reversal candles. Now, look, folks, you can go on the internet and see a bunch of crap out there. You can go buy books, but they don't really teach you to trade. Steve Neeson's book, great book out there. Get it. It'll tell you about every type of Japanese candle that is out there. But you don't need every candlestick pattern. You only need 7 of them. If you learn the 7 bullish ones, the opposite is available. So it's really just learning 7 candlestick patterns out there that will just simply free up your world. And that is how the market, as I like to say, or Tom likes to say, talks, walks, and squawks. He's looking at volume. I'm not looking at volume. I don't put volume as a priority out here. But what I do know is how markets make tops and bottoms. They'll do it with a TD9 count if it's present. They'll do it with a Rhodes Momentum Indicator. Is that the only way that markets make tops and bottoms? Heavens to Betsy, whoever Betsy is, no. But when they are present, boy, they are gigantic signals to us. Just think of how bearish everybody was yesterday morning. I got several emails. Should I take the short position right now inside the NASDAQ? And luckily during the show, because we were doing the 9 to 10 o'clock show, we had the signals that said, no, you can't do that. You can't do that while price is pushing back at support, the bottom of its daily profile, and when we've got bottoming signals on the short-term time frames. We had it on the 30-minute. Here you can see it on the hourly chart. So, John, in this case here, we've got the valid bottom. And now what price is doing on the hourly basis, it is dealing with resistance. That is 11,136.75. It's not a resistance level Stevie created. This is coming from the system. This is coming from our TAS market profiles. You can see that that profile was bullish in structure. Once price got inside that, which was at about 4 o'clock this morning, and it was down at the bottom of that bullish structured profile, the easy trade was, hey, price is going to go make a run for the top of that box, 11,136. Now, if we do see a close on a 30-minute basis above 11,136, this is the NQ. This is the hourly time frame that we're looking at out here. This is then going to suggest that price will make its way up to its next resistance level, and that's at 11,288.50. That is where price broke down. So that's what the hourly time frame chart for the NQ shows. And so whether there's a 3 drive to a bottom or not on the daily time frame, one thing I can assure you is that the short-term time frames will give us signals as well. Here is the signal yesterday. This signal here came in at about, so prior to us getting on air, I take that back. That signal came in as we were on air between 9:30 and 10, and you can see that held up all day yesterday. Even on the pullbacks out here, held up. We knew that was support. We knew that because of the pattern that was out there. Now, on the 30-minute time frame, since we've moved over there, you can see we've made a higher high during this 30-minute session, 9 to 9:30. What that's going to do, I take that back. Where it's trading right now, it'll negate the entire TD9 count. I was going to say it's going to be bar number 9. But if this bar here closes below the close of bar number 5, and right now it's trading below that level, then this pattern here is not going to form, which would actually be kind of bullish. So if by 9:30, 7 minutes from now, 6.5 minutes from now, the NQ closes below 11,142.75, this set of numbers here is going to go away, because it won't become a valid TD9 count out there. And therefore, on a short-term basis, and that's what bulls want. They don't want to see that, because that would generate a short-term topping signal out there. So it would be interesting to see where the NQ actually closes here by 6 o'clock. The bulls are pulling for the NQ to close below, again, that level is 11,142.75. And the bears are saying, hey, I want to close above that level. I don't know where it's going to close, but you and I will know in just a few minutes out here. So, John, thanks for the question. I hope that helps you out. And let's go on to our next question. Next question was from Brent in Martinez, California. Brent wanted to take a look at U.S. Steel. That ticker symbol out there, folks, is X. And as we take a look at it, here's what we know. We know that price is trading above the top of its daily profile, so it's above resistance. So for that time frame, that would be bullish. If we take a look at the weekly time frame, so then where is price targeting? What's the next level? Where's the next resistance level? Pretty simple. We go from one time frame, the daily, because price is above resistance, and go take a look at the weekly. Well, in the weekly, this says that U.S. Steel, trading above the center of its profile at $8, wants to make a run for the top of that box, and that would be $8.84, the top of the profile. If price can close above $8.84, looking at my charts here, you tell me where is price headed to next. See, I don't want you just listening to the show. I want you to understand these tools so you can take a look at these charts out here. And for me to be able to pass that information on to you, you to be able to pass it on to your kids to the grandkids, and so on and so forth, because this set of tools works all the time, has historically, will for the next 100 years out there. And let's face it, we all want our children and we all want our grandchildren. We all want our friends and family to do better. And one of the ways that you accumulate assets out here is by investing in the markets. Owning a business, although in today's day and age with the political chaos and this pandemic, or is it really a pandemic? Is it really a pandemic? But I won't go there, but I will pose the question. Out here, a pretty tough time to own a business unless it happens to be the correct business out here. But the answer to the question with regard to U.S. Steel and where price would head to if there's a close above $8.84, just because a government official tells you something is a pandemic doesn't mean it's a pandemic out there. In any event, out here, a pandemic might have been the Spanish flu. Yeah. In any event, so where is price headed to in U.S. Steel? $13.52 if it can close above $8.84. Now let's go take a look at Stevie's other charts out here. And we take a look at Stevie's other charts. Well, we're about to go to a break, but on the daily time frame, we're just looking, is there any kind of topping signal that Brent needs to be concerned with? There isn't. However, there is resistance. And that's what price hit yesterday. Stevie's, well, it's not my green line, it's the TD9 breakdown level. So Brent, 848 is your key. If price can close above that, the signal today is a change in trend in U.S. Steel to the upside. Steve Rhodes with TFNN. Be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're off to the races out here. We've got the Dow. Come on, change over here. Well, I guess I've got a bit of a stall here going on at the same time. I think I've got too many apps open and running at the same time. I can't change that. But I do see you can see how it's kind of flashing periodically out here. I wonder if I need to just. I've got a new scanner that I built that's running in the background, and it really should be running on my other computer out here. And so this is the first time since I built that yesterday afternoon, early evening, where I'm seeing how it's impacting the data flow out here. But in any event, we can still go ahead and so you've got the markets. Looks like the Dow might be down about 29, S&P's up 3, NASDAQ 56 to the upside, Russell. It says 12 points to the upside. The semis are up 11 out here. So let's go to a couple of our questions out here. Hector wrote in yesterday and again this morning. Thanks for doing that, Hector. And the question is really about the global flow of capital. And his question is, during the morning show, can you please discuss the global flow of capital? So what he's really referring to, and this is one of the pages that we're looking at. So if you want to understand perhaps the most fundamental aspect about trading is trying to figure there's a big ball of capital that floats around the world, and it is always looking for a place of confidence, at least the most confidence. Even if there's are you really sure that's a confident area? One, maybe it's more confident than another. So example, the U.S., you have more. Where do you want to park your money? Do you want to park your money in the U.S. with all of our issues going on, or do you want to park it in Europe? I mean, I'm just asking you this question. Do you want to park it in Europe? Do you want to park it in Russia? Do you want to park it in Asia? Do you want to park it in China, in Japan? Where is it that you want to park it? Well, I don't know where you want to park it, but what I do want to understand is where is that big global flow of capital, that big ball around here? Where is that finding confidence? So this is a data table. And in this data table, we can take a look at the Dow. We can take a look at the and these are ETFs. So you can do this too. What you can't do necessarily is tell me how the Dow is trading right now, what it's priced at in terms of dollars, which is 45.24 using the Dow Diamonds. Well, what is it priced in pounds? Well, it's 29.72. How about in euros? It's 30.85. How about in yen? It's 36.70. So you want to understand, people around the world trade our markets, obviously. So we want to understand what do things look like on their screens. And what we're looking for here, the column that you're looking at says ROC. That stands for rate of change. So this is the rate of change over the last 26 weeks. The March bottom was 26 weeks ago. And so this tells us what our rates of change are. And what we're looking for is there some type of area where capital is fleeing to. And it'll be very lopsided. Right now, the answer what has had the best performance of the instruments that I'm showing here, Germany, Japan, emerging markets, the Shanghai, the Brazilian markets, Hong Kong, Mexico out here. The biggest gainer in the 26-week period is Germany. Germany, of all places. Well, you probably didn't know that. I didn't know it until I updated this chart. But what I don't see here, Hector, is I don't see a predominance in the global flow of capital. I just don't see it. You've got 48% in Canada, 41% in China, 45% in the Dow, 66% in Germany out here, 43% in emerging markets, 38% in Brazil. So you see, we just don't have what I would see is, so we don't have the global. Now, the global flow of capital, when it does park itself somewhere, and people are doing these analysis of price earnings ratios and stuff like that, you can throw that crap out. It doesn't mean anything. What's going to drive prices up is supply and demand. And the demand's going to be the global flow of capital says, I want my assets in X, whatever that X might be. Could be gold, could be the U.S. markets, could be the U.S. dollar, could be treasuries, it could be Germany. I don't think it's Germany out here. So, Hector, I hope this helps you out with regard to the global flow of capital. It is absolutely something that we want to always be paying attention to. And sorry that we weren't able to get to that question yesterday. We had a question from Gary in New Buffalo, Michigan, and Gary wants to take a look at gold and silver. So let's go do that for Gary. I'm sure if Gary has that question, so does everybody else. So let's pull open the December gold contract. Actually, what you're going to see is a number of futures contracts. You'll see what prices are trading at. You'll see that October 2020's contract, for example, it's trading right now 1949. December, which is the active contract, 1957. February of 2021, 1965. April 2021, 1969. June 1972. So you see what everything is trading at out here. In fact, you can even see the daily profiles, the top, the center, and the bottom for each of those contracts out here. And you can see how many dates on days trading. Trading days, that's over here, DTE on the very right-hand side. So it tells you when that contract is going to expire. At the bottom portion of our charts out here, we can see the TAS profiles and some trend lines. So we're looking at really panel number 2 from the left. What do we know about gold? It's trading in between support and resistance, a couple levels of support and resistance. Support and resistance of its support being its rising trend line, and support being the center of its bullish structured profile. So there's strong support inside gold between 1920 and 1938.50. A close below 1920, well, that would spell problems. That would spell problems for gold. But right now, that's not the problem. You can see that there is a descending trend line resistance level. So even though the top of that profile is 1992, what we can see is that trend line is really capped off any kind of rallies out there. So, Gary, that's what I see when I take a look at gold. Now, let's go take a look at gold on other time frames, some short-term time frames out here. So give me just a moment to switch over to those charts. And actually, I've got another idea, another short-term chart. Give me a moment to get to that. And I want to take a look at the how gold contract is trading, what patterns are out there, and where's the trading in relationship to its opening range levels, because you want to understand that. So for support and resistance, for reasons that I can't share with you, not because I can't share with you, but because I can't share with you. But I don't need, what I will do is I'll share it with you. Ooh, boy, was that confusing or what? Well, it wasn't confusing to me, but welcome to my world. Here's really what I mean by that. The opening range levels, and by opening range levels, what I'm referring to, I'm not referring to the 9:30 a.m. cash open inside the U.S. market. No. We don't do that. You and I, because we're using the equity futures contracts to do all of our pattern recognition and exploration, what we are doing out here is, I don't even know. What are we doing out here? Well, I will tell you what we're doing out here when we take a look at this chart here for gold. We're trying to understand where's the opening range of the U.S. Open. So that's going to be between 6 and 6:30 in the evening. Then where's the opening range of the Asian Open? Those are the red horizontal lines on my screen. What's that first half-hour bar? And then where is it for the European Open? And that will be the blue lines that are on my screen out here. And it resets each day. So right now, price is trading in between its opening range level. In fact, if we take a look at the gold contract, here's what we know. We know that this formed a TD9 count top on the short-term basis, and it did that here at 5 o'clock this morning. You got to love that pattern, right? Well, I'd like you to love that pattern. Whether you love it or not, I love that pattern because it is so helpful. And so if you were asking, well, geez, as gold got up into the 1960-ish level out there, why did it stop? Why did it stop at 5 o'clock in the morning? What could you have known to have assisted you in trading gold at 4:30, 5, and 5:30? It was the TD9 count pattern. And now, Gary, price broke through one key level of support. That was 1958. It's traded to its next key level. That's 1953.20. And if price doesn't hold there, well, you can expect price to get down to the 1951 area. That is the bottom of its U.S. opening range. And that would be its final support level. Steve Rhodes with TFNN. We'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish a Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Welcome back, folks. Steve Rhodes filling in for Larry Pesavento. That's between 9 and 10. And, of course, I'm filling in for myself between 1 and 2. If you are listening at the normal time, this is recorded. Obviously, we'll be back to normal on a Monday. So we've got a couple more questions that have come in. Yesterday, I didn't get to one that came in from Angelo. And Angelo wanted me to take a look. Oh, let me do this first here. Angelo, I'll get to yours in a minute. But Gary had asked about silver as well. So we're just going to take a look at the important chart for silver. Not that they're not all important, but we've just spent some time taking a look at the TD9 count patterns out here. And if you take a look at silver, so silver, whereas gold topped at 5 this morning because of its TD9 count, silver topped at 3 o'clock this morning on bar number 8 of that TD9 count. Now, take a look at what transpired just as we came on the air at 9:30. That formed bar number 8 of a TD9 count. As long as this bar number 9 right now that's forming closes below, this is the price, Gary, 27.21. Odds favor that price is going to make a run up to the 27.22 area right now. That you can see that Stevie's green line turned red on that 9:30 bar. Now, when that happens, there's a phenomena that takes place. That phenomena is we see price and that line catch up to each other. It doesn't mean on the next bar. It doesn't mean on 2 bars or 3 bars later. It just tells us to anticipate that. Well, because of the TD9 count bottom, that might form. Looks like it will form, but we won't know until 10 o'clock out here, Gary. But if it does form, this would suggest to me that price should make its way up to Stevie's red line around 27.22. If it makes its way up to that level, tags it, rejects it, closes back below it, well, that would be a bearish message, and that would suggest that silver would head lower. Whereas if price can close above Stevie's red line, again, right now printing out at 27.22, then we could see a move back up to probably the 27.45-ish area. So that's the 30-minute time frame chart here for silver. If we looked at the other charts, silver just been trading sideways for months now when you really look at it. Just really in a range, but just really sideways out there. So now let's go back to Angelo's question. And Angela was asking to take a look at the corn ETF. Now, I'll pull up the corn ETF. Here's what I don't know, but I probably do know. And that is inside of corn, C-O-R-N, the Tecrium, is that how you pronounce it? It's how Stevie pronounced it, ETF out there. You'll see that corn is trading above on a daily basis, the top of its daily profile, 1308. Now, the question is, Angelo, is what makes up this ETF? And do you know? I don't know off the top of my head. Typically, these Tecrium ETFs are made up of 2 or 3 futures contracts. So in the case of corn, let's go switch over and take a look at those futures contracts out here. You really should be, if you are in the corn ETF, you could quite frankly give a rat's patootie about how it's trading. What you want to understand is how are the futures contracts. You are trading the futures contracts, and you're not just trading one futures contracts out here. So it makes it a bit more difficult to manage, but you still want to manage it. Here, if we take a look at corn, you've got December corn on the very left. The next to that, you've got March corn. The next to that, you've got May corn. The next to that, you've got July corn. Now, I don't know which of these or any of these. We could go out to September 2021 or December 2021. I'm going to guess that December 2021, the corn contract, which I'm not showing on my screen out here, is probably a part of the corn ETF. But Angela, you've got to go figure that out. And really the question should be, what's going on inside of corn? So what I can do for you right now, I'm doing everything I can, is without just making this the Angelo Corn Show out here and me being corny, so to speak, is let me just go take a look at December 2020 corn and what is it doing. And so this is, you can see, it is completed a TD9 count yesterday. Now, Angelo, this is really cool because the high of a TD9 count needs to form on bars 8 and 9 or the bar following 9. Today is the bar following 9. It's a higher high out here. So what do we know? Well, price is also hitting a breakdown level, 381.50. Now, if price can close above 381.50, that would be bullish and say this continued move higher inside December corn, that momentum is still in place out here. The other way to understand if momentum is in place out here is whatever the high of the December corn contract is today, if price closes above that on Monday or on Tuesday, as an example, then the TD9 count will have failed to spot a top, which can happen, most certainly. And it'll also tell you about a strong momentum move. So what do you do here if you are long the corn ETF? Well, the first thing is go figure out what futures contracts are traded with inside there, and then be able to do your analysis on each of those contracts. With regard to December, when I jettison the position out here, I don't know where Angelo got in at and what his thought process was and what the timing was, and it may be a very long-term trade. He should anticipate, because of the TD9 count, that the December corn contract will pull back and test support. Where is support? You tell me, where is support out here right now? You know that area. That's 370.07 right now. It is Stevie's green line. So just because price would, even if you have a topping pattern and price just pulls back to that, the line is green, it would still be bullish. Would you jettison the position right now? Depends on the type of trader you are. Would I? No, because I would want to see some level of support broken, a close below. And I know that means that you have to give back some gains out here, but maybe this is a strong momentum move inside of corn. And so, that's just simply how you manage it. So, Angelo, thanks for waiting an extra day. Again, I don't know which contracts make up the Tecrium corn ETF out there, but really all the decisions should be based upon what those futures contracts are doing. So I hope that helps you out. And again, thanks so much for waiting a day. Ray writes in, and Ray wants to take, I think we did this yesterday, AP. So I got through all of yesterday's questions out here. So that's a beautiful thing. Let me see. I know there's some other questions that have come in this morning. So let's take a look at those. Pat writes in, and wait a quick, Dennis. Good morning, Steve. Could you take a look at AUY? So let's go take a look at AUY out here. AUY, that is Yamana Gold. And I want to do it on both of my systems. So just give me a moment here. I'm going to switch over to a different set of templates so that we can get that going. AUY and US Steel, just to go back to Brent's question out here, US Steel is trading above Steve, the TD breakdown level out here. It's trading right into its 200-period exponential moving average. But Brent, as long as price closes over 848, U.S. Steel looks very, very good. Okay, but we're going to go ahead and put up AUI on here so we can figure out what Yamana Gold is doing. So this will take just a moment to populate the daily, weekly, monthly, and quarterly charts here for Yamana Gold. I probably should have moved this off of my chart. But what this is doing, it's looking up that symbol. It's applying all of my tools out here. So we've got our TD9 counts. We've got the Rhodes Momentum Indicator. We've got the Chapman Wave counts out here. We've got our TAS market profiles. We've got everything that we need to be able to interpret the message of Yamana Gold. So what do we know about Yamana Gold? We know that it formed a Rhodes Momentum Indicator top out here. We can see wave number 7. That is letter G. So you've got 2 topping patterns. Price right now is trading below Stevie's green line. We can see just simply sideways movement in between about 650 out here and I don't know, 570, something like that. You got a nice hammer candle. Let me get my cursor out here. You've got a nice hammer candle back on the date of August the 25th. So that's really kind of your support level, because if price closes below 574, was it 574? Yeah, 574. Price would run back to 544. So you got topping patterns out there, Pat, and you've got sideways movement. Reason to sell? I don't know. I don't know where you're in. Reason to buy? No, not a reason to buy. Price is below Stevie's green line out here. So on the weekly time frame chart, we've got just a few moments out here. Let me just populate it, see what we've got. Price is also on a weekly basis below Stevie's green line. So that's not ideally what you want to see. Just suggesting a further retracement. The monthly is saying 484 is gain. This is Steve Rhodes with TFNN. I'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's kind of wrap up this last 2 minutes out here. Take a look at what the markets are doing, what you're going to be watching for during the day. So right now, as of 9:54 in the morning, S&P 500, we're taking a look at the speed dials. That's in your upper right-hand corner portion of my screen. You'll see that the S&P 500 is bullish for all of its time frames. It's really important. Now, we've got a tale of two stories out here because when we switch over to the NASDAQ 100, well, we've got bearish for two of its time frames, the daily and the 240-minute time frame chart. So let's go take a look at the week link out here, and that would be the NASDAQ. And we spent a little bit of time taking a look at understanding support and resistance. And you really want to understand this stuff, folks. So to the extent that you don't, I've got tremendous workshops that are archived that will teach you about this stuff. And that's really what I want to do. So what's the NQ done so far today? What has it done? It's pulled right back to the Asian opening range, 11,022. So far, all that we're seeing out here in the market is just normal jostling. Price testing support, price testing resistance levels. Where's resistance? 11,132.75 in the NQ. So your day, you already have, based upon the tools out here, based upon understanding the opening range, TAS market profiles, our TD9 counts out here, you've got support at 11,022. If price closes below that, it's headed further south. Otherwise, prices just simply pulled back to support the Asian opening range. How can you trade the futures contracts and not understand the opening range for the European Open, the Asian Open, and the U.S. Open? I'm just suggesting that if you apply it to your charts and you start paying attention to it, you'll be able to answer these questions. What is the market doing? And so far, the NQ has bounced off of 11,022 out there. Although its market breadth for its daily time frame is still bearish out there, the short-term time frame, if you noticed, was bullish. So, folks, stay tuned for a great day of programming out here. Thanks for joining me at 9. I'll be back at the normal 1 o'clock hour. And have just simply a fantastic weekend and a great trading day. And we'll look forward to seeing you soon. Take care.